Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently rejecting a quite important monthly historical structure level. This zone was in fact acting as previous resistance here. Again, here the market then broke it to the upside. At that point, all that previous resistance was turned support here, here, and here, and we can see how precisely it was respected. Just a few months ago, in fact, we had the last test of this zone, and the market started rejecting the level to the upside. We can also notice how now we had a break above the previous high. This was the last level of resistance that the market had, and currently we have broken above it. So in a situation like this, more bullish price action could be expected since there is no immediate resistance. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how we had the impulse to the upside, the correction, and now the break above the previous resistance. In a situation like this, more bullish price action could be expected. There is the possibility to see a potential retest of this previous weekly resistance, now turned support, before then getting more bullish continuation. But from a directional perspective, it's quite clear that there is definitely a possibility to see more bullish continuation. Going down on the daily time frame, what do we see? Well, from a daily perspective, first of all, I did speak about GBPJPY a few days ago. After this impulse and correction from here, I explained all the reasons for which we could expect this rejection to the upside. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, if we look at the current structure of the market, we can see that the level that the market at the moment is rejecting to the upside is previous daily resistance, which was acting as resistance all across this zone, which is now turned support here. And as we're testing previous resistance turned support, we could expect bullish price action to be printed away from this area. Now, before we continue with our analysis from a daily perspective, we must also go and check what is going on if we look at the commitment of traders. So what institutions at the moment are doing. Now, if we check the data for the pound, we can see how lately net positions have been increased. We went from having a negative net positioning of minus 24k net positions with more shorts than longs. In fact, we had 52k shorts compared to only 28k longs, all the way up to currently having a positive net positioning of plus 11.5k net positions with more longs than shorts. In fact, we have 69k longs compared to only 57k shorts. Now, this makes the pound much stronger. And if we check the JPY, we can see how net positions are getting decreased. We went from minus 64k net positions to having minus 80k net positions with 23.1k shorts added with the last report, with shorts going from 83k to 117k. So clearly the pound is getting stronger and the JPY is getting weaker. That is exactly what we need for more bullish continuation. And in fact, GBPJPY has been trending higher, fueled by the longs that institutions were adding on the pound and the shorts that they were adding on the JPY. So in a situation like this, first of all, we must identify how this area is not only previous daily resistance turned support, but actually it is confluence of support. Because if we take our Fibonacci from the low to the high of this impulse, we can notice how we have both the 50% and the 0.618 Fibonacci retracements lining up perfectly at this area, which the market has in fact just tested and is currently rejecting to the upside. We must also notice how, if we look at the previous high, this area was clearly acting as resistance. Only if we will see a successful break above the level, only at that point this previous resistance will become support. So if we get a break and a retest of this previous resistance turn support, this is where we would have good probabilities of seeing more potential bullish continuation away from the area. So we don't know if the market will manage to break above the previous high, but if we get the break on the retest, here is where we have very good probabilities to see more longs added on GBPJPY from an institutional perspective. So if we do get the break on the retest, how we could be approaching this potential move higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I've really suggested you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard after you joined the mentorship program, you can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, you can join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description of the video. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.